Did you know that analysts believe Tesla's stock would soar following the split? Some well-known Tesla bears predict that by year's end, the electric vehicle company's stock price will have hovered around $200, the same as it did during the split. Some predict that Tesla's stock will jump immediately following the split, though. To learn more about this, stay watching and tuning in. The views of Tesla bulls and bears are never in agreement. Bears have forecast incredibly low prices for the same stock, while bulls have seemingly impossibly high valuations for the company's equities. It's difficult to tell in the current economy whether Tesla is headed for a higher or lower valuation. You'll learn why Tesla stock will soar following the split in today's video. The closing price of Tesla's shares on August 24th was around $891. Shares were trading at about $302 when the market started for business the following morning at 9:30 a.m. after-hours trading on the 24th saw a spike in shares of Tesla, the manufacturer of electric vehicles, following the implementation of the company's 3-for-1 stock split. This is the second such action in around 2 years, as the most valuable car maker in the world tries to lower the price of its stock. Following the market's closure on August 24, Tesla stock started trading on a split-adjusted basis. As a result of the most recent stock split, which was authorized by shareholders earlier this month, each investor gained nearly 2 extra shares. In an effort to lower the price of the almost $900 stock, Tesla initially revealed the proposed 3-for-1 stock split in June. The new share price, based on the closing price of today, would be somewhat less than $300 per share. Since announcing the 3-for-1 split in early June, Tesla's shares have increased by about 25%. However, in the 20 days that followed the announcement, shares of Tesla increased by almost 70% due to news of a 5-to-1 stock split that occurred about 2 years previously. Stock splits are often well liked by shareholders. A stock split doesn't always indicate that people are receiving more value for their money, although it's pleasant to feel like you're getting something for free. A stock split facilitates minor trades for individual investors, but has no effect on the company's fundamentals. A lot of experts predict that the Tesla split will lower the price of the company's stock for individual investors. But even with the 3-to-1 proposal approved, Tesla's stock has lost more than 28% of its value so far this year. This is mostly consistent with the overall market, and Tesla is currently listed on the Nasdaq Composite Index, which is down 20% so far this year. Since Tesla's stock price has been close to $1,000 per share for some time, most regular investors have found the company to be prohibitively expensive. The company may see an increase in retail investment as a result of the 3-for-1 stock split, according to Lindsay Bell, Ally's chief money and market strategist. But on August 25, the world's most valuable manufacturer announced a 3-for-1 stock split to attract individual investors, which resulted in a 2% decline in Tesla shares at the close. With the split allowing investors to receive 2 additional shares for each share they had as of August 17th, the stock opened at $302 and closed at $296.07. It closed at $891.29 prior to the division. Stock splits, according to B. Rayleigh, chief market strategist at Art Hogan, undoubtedly appeal to ordinary investors more and provide them with more cheap possibilities. What does Tesla stand to gain from the stock split? A stock split usually indicates optimism inside the organization. Additionally, it expresses confidence that the share price will eventually rise to a level that is comparable to or higher than its pre-split level. Such an idea is supported by the performance of Tesla shares recently. Tesla's stock has risen more than 6% in the last month. Before experiencing a decline during the last week, the stock had increased by nearly 13% since 1 month ago. The EV company released mixed second quarter numbers, indicating a nearly 1/3 drop in profit from the prior 3 months. This decline was partly caused by production slowdowns at a Shanghai factory during COVID lockdowns. Tesla's revenue increased by 42%, and its profit doubled from the same quarter last year, indicating significant long-term growth. Nevertheless, the company's stock has had a challenging year overall in 2022, declining by more than 18% from the year's beginning. That decline is consistent with the sharp declines seen in all three of the major stock indices this year. Nevertheless, in spite of these challenges, a large number of skeptics, and frequent criticism for its conduct, Tesla has grown to become the world's most successful producer of electric cars. Both the automaker and its share price have experienced remarkable. First, increased production leads to more car deliveries. It is commonly known that due to production limitations, Tesla has previously had trouble keeping up with demand for its cars. In actuality, the company's rapid expansion has been impeded by a shortage of production space. With the construction of two brand new gigafactories in Austin, Texas, and Berlin, Germany, that is set to change. With the two new additions, Tesla hopes to increase its annual car production from 1.05 million to 2 million. Regrettably, the company continues to face the same problems that other automakers are currently having with their supply chains for components like electronics and raw materials. Second, a larger gross margin is the result of more deliveries. Simply said, a company's revenue less its cost of products is its gross profit margin. For Tesla, the car's MSRP less the direct cost of manufacturing would be the car's automotive gross margin. It would not include expenses for marketing or money spent on research and development, but it would include costs like the basic materials needed to produce each car. Those are the costs of operation. Due to a phenomenon called scale, Tesla's gross margin rises as it produces more vehicles. Tesla would lose money if it constructed a factory with the capacity to make 500,000 cars, but only produced 50,000, as it would be paying for the additional capacity without really using it. Its fixed expenses are as low as possible as a percentage of its revenue when it produces all 500,000 cars, increasing its gross margin. Due to the company's record-breaking car deliveries, Tesla's gross margin has steadily increased and is currently at its highest point in the history of the business. Third, higher net income is correlated with a bigger gross margin. Most investors keep a close eye on net income. It's the company's profit margin, to put it simply. It's significant because it converts to earnings per share when divided by the total number of shares in circulation. Many analysts projected that Tesla would never turn a profit due to the high cost and difficulty of manufacturing automobiles. Only about 15% of the finest automakers, like Ford, are able to maintain a gross profit margin. However, Tesla has created industry-leading procedures for building electric cars, and the end product's high quality justifies premium cost. With a gross margin of 32.9%, Tesla has much more flexibility for operating investments, such as the creation of novel software technologies like autonomous driving and the design of new goods, which can help the business stay ahead of its rivals. However, more. Crucially, a high margin increases revenue to the bottom line. In the first quarter of 2022 alone, Tesla produced net income of almost $3.3 billion. In conclusion, while the more reasonable price per share may encourage new, smaller investors to join the fold, the stock split of Tesla will not increase value for investors. The factors that will keep the company's shares rising both before and after the split are its steady profitability and quick growth in manufacturing capacity. In actuality, it is not anticipated that the stock split will have a long-term effect on Tesla shares. Tesla's stock split is a sensible move given the current share price, but it may not make a significant difference to its performance over the long term, stated Craig Earlham, senior market analyst at O&DA in New York, in an interview. The majority of interest will not be swayed by the decision. However, smaller investors and Tesla staff may be pleased with the change. Although individual involvement will be restricted due to institutional investors' dominance, the split was intended to help employees while keeping an eye on the retail market. In the first quarter, Tesla's overall sales increased by 81% year-over-year to $18.8 billion, while its operating income increased to $3.6 billion. However, the company's Shanghai plant shutdown resulted in lower second quarter figures. Tesla achieved the greatest vehicle production month in history at the conclusion of the quarter, with an operating margin of 14.6% and positive free cash flow of $621 million, despite the second quarter slowdown. In October, the business plans to disclose its third quarter production and delivery results. For more of this stuff, check out Tesla Stock and our other films.